investors, this is the Young Investor Guy. Welcome to the channel for investors. In this quick video, I'm going to give you an update on USO, what's currently happening with the fund, and how this will trade moving forward. At any time right now or during this video, please be sure to give this video a like. I would really appreciate it. So, I've been getting many questions from a lot of people on whether USO is a good investment. Now, before going there, I think it is important to understand what USO is exactly before thinking about going into investment. Now, just to simplify things a little bit, USO is actually a fund that buys and sells futures contract. Now, USO doesn't actually hold physical oil inventory. Now, all of these oil's futures contract have different prices. I'll link all the details on the CME website. You can find them down below. Now, at the end of each month, USO usually sells the upcoming futures contracts and buy newer ones. Now, with the case earlier, USO had to actually sell the May futures contract and buy June futures contract. Now, since the May contracts went negative, USO had to sell those May contracts at a loss and then repurchase the June contracts at higher than $20. Now, that's really bad for USO because you're selling low and buying high, which is the complete opposite of what we want to do in the stock market. The USO fund has been making a few adjustments lately, and I'm going to outline these adjustments for you. Number one, we're going to talk about their 1 to 8 reverse splits. And number two, we're going to talk about why they're doing reverse split. And third, we're going to talk about their new strategic adjustments to this USO fund. Let's talk about the 1 to 8 reverse split first. The reverse split will reduce the number of shares outstanding, but at the same time, it will increase the value per share. So for instance, if you have 8 shares of USO right now, on the morning of April the 29th when you wake up in the morning, you'll realize you now only have 1 share. At the same time, the price of USO will be trading 8 times more. So if USO is trading at $2, when you wake up in the morning, it will be at $16 because 2 times 8 equals 16. Now the results are the same actually. If you had 8 shares at $2, the total value will be $16. Now if you only had 1 share of USO at $16, that is still $16. Now you ask, what if I have 9 shares of USO? What would I have instead? To calculate that, you would do 9 divided by 8, and you would end up with 1.125. Since you can't really trade 1.125 number of shares on the market, what will happen instead is you'll have that 1 share. Now that remaining fraction of the shares, you can expect USO to return that money to you in cash through your broker. Okay, so now you're like, okay, why are they doing this? Why are they doing this reverse split? Like, what's the point? It's, since these are all the same, the value is all the same, why do they want to do this? Now, there are 2 main reasons why they want to do this. The first main reason is they want to prevent getting delisted. Since USO is currently trading at around $2 range, it is already very close to the $1 range. Now, if they trade consecutive days at the $1 range, the exchange is going to go and reach out to them and say, hey, you can't be trading at the $1 range because we'll delist you. Since USO buys a lot of futures contract in the short term, and no one really sees demand going up in the short term, the USO fund actually fears that this actually may end up going to $1 and they have a fear of getting delisted. So that is why they want to do the reverse split. Get this number up as high as possible to $16 at the moment. So they want to be far from the $1 mark. The second reason is to help with USO's image. Companies and funds want to maintain good images as high prices are usually considered to be good quality stocks. If you look at companies like Amazon or Chipotle or Google, they like to keep their stock prices high and then never wanted to do a split. Let's also talk about the strategic adjustment USO had made. In the latest disclosure, USO says now they're allocating more weights to future months apart. As you can see from this disclosure here, USO says now they're allocating 30% of its portfolio in crude oil futures contracts for the month of July, and then followed by 15% in the month of August, another 15% for September, 15% for October, 15% for December, and another 10% for June of 2021. By doing this, USO is attempting to shift its risk further apart to the months ahead. As we can see from the CME website, we can see that oil prices in the future months are trading much higher at the moment, with $21 in August, $23 in September, and $25 in October. As discussed earlier, prior to this adjustment, USO was only holding contracts for the closest months. So from earlier, they were only holding contracts for May, and then holding contracts for June. And they had to sell the May contracts at a loss and buy the June contracts. Since in the short term, there's not much demand for oil, by doing this strategically, USO is able to shift more weight into the July contracts, August contracts, as well as September contracts, where people are anticipating things will start to kind of pick up slowly again, and thus this will actually help to preserve USO's value. Since USO is closely tracking WTI's futures contract, it all really comes down to the demand of oil in the short term. If there's still no demand in the short term, in the next 2-3 months, that should still continue to drag down USO's performance. Investor, what's your take on USO? Let me know in your comments down below. Please be sure to like and subscribe if you enjoyed the video. Thank you so much again for watching. I really appreciate it, and I'll see you next time.